Hello and welcome. Taking fresh measures to check the rising inflation rates and the depreciating cedi on the table as the Monetary Policy Committee of the Bank of Ghana begins its emergency meeting today. George Wiafe has the report.
Sources say the meeting has been mainly influenced by the current pressures on the Ghana cedi, which has resulted in some record depreciation against the US dollar. Managers of the monetary space are also worried about the sudden hike in utility tariffs and how that might affect the expected slowdown inflation rate that has hit 31.7% for the month of July this year. Therefore, there is a need for the monetary policy to respond to help with market confidence and deal with some offshore investors that are dumping the country's bonds. There are also reports and projections of some significant hike in the policy rate from the current 19%. US-based investment banking giant Goldman Sachs, for instance, is projecting at least 200 basis points to 21%. That is the margin of increase that we should be looking forward to when the committee finalizes its meeting later today. We should also not rule out the Monetary Policy Committee coming up with some foreign exchange measures to help control the current pressure on the Ghana cedi. But there's also an argument that the current challenge facing the economy is more of a fiscal issue and not necessarily a monetary challenge. And therefore, whether all these measures that the Bank of Ghana is rolling out will get us the desired results going forward.
Meanwhile, Associate Professor of Finance at Andrews University in the U.S., Dr. Williams Pepra suggests that the Bank of Ghana needs to adjust the monetary policy rate upwards to salvage the depreciating cedi. He spoke earlier on the marketplace.
Ghana, we have been complying with inflationary targeting monetary policy rate approach until recently. So all this while our prime rate, the monetary policy rate, was always higher than the inflation rate. It is just recently that we decided that we are not going to go that direction. And that is what has helped Ghana to correct the anomalies. But now that we are seeing inflation going up to 31.7 and treasury bill rate around 27%, we cannot keep the monetary policy rate around 19%. It's going to bring what we call arbitrage. People will no more trust the central bank. And in that case, the system will collapse. So central bank will have to make sure that they move the monetary policy rate up a bit to between 21 and 25%, normally closer to the treasury bill rate. We shouldn't forget, as a country, Ghana, in 1995, inflation went as high as 55%.
55%?
There were some, yes, 55. There were some measures that were taken, I'm sure, and that brought it down. Central bank, they have the nose. They should visit that old strategy and see what they did to bring back the currency or our situation into normalcy. This is what we need to do. We have to just go into history. A lot of measures, hard measures were taken. It was through that the VAT was introduced to shore up the revenue.
Financial analyst and management consultant Christian Tichijan joins us on Zoom. Hello, sir. Thank you so much for your time. First off, do you think a call for an increase is justified?
Yes. Thanks for having me, Beverly. I think it's very well justified. My professor who did speak earlier, the notes are there. If you check in history, in 1995, Ghana's inflation rate went as high as 55%. So I think it's very important that sometimes when you are lost in the middle of nowhere, you can refer to what experience has taught you. And then by that time, they were able to increase the monetary policy rate that was quite closer to what the inflationary rates were giving us. So I think it's something that we need to look at. We have to just visit history, and then we'll be able to propound some of these solutions just by looking at the previous notes. So we should be expecting minimum 200 to about 300 basis points in addition to the current rate of 19%. So we should be expecting something around 22, 23% as the new monetary policy rate that's going to be announced.
All right. Some analysts are warning against it, saying it will choke the economy. What's your view?
Yes, management is all about choices. And I do side with the point that you are making right now, because Once the monetary policy rate also goes up, it means cost of borrowing also becomes expensive. When it happens, NPLs grow in the banking industry. A lot of people rather want to give their monies to government instead of investing into the economy, because the government bills are more or less considered risk-free. So the economy definitely will be stifled, but we are in a difficult situation where government is spending almost about 60% of its internally generated funds, that is the revenue, on debt servicing. So it's absolutely important that we need to take hard measures, and we need to take the ones that will be beneficial at the end of the day. I keep mentioning that we are not in normal times. Very soon we're going to have utility costs going high. Electricity is expected to go high by about 27%. Water about 21%. So times are going to get harder. So we need to put in place some pragmatic measures to ensure that the citizenry are relieved of their burdens.
But tell me, what other expectations do you have?
We happen to find ourselves where from January up to now, our cedi has devalued more than 30%. In face value, almost 4 Ghana cedi from January till now. That is not a welcome news, and it's actually stifling a lot of businesses. So the challenge that we have in this country is systemic, and we don't really expect that we are going to propound solutions that is going to solve all our economic problems. But the challenge that we find ourselves is that our cedi keeps depreciating, and at 30%, it doesn't look good. So there has to be an announcement. The systemic problem we have here is the fact that we are import dependent and our export base is very low. Government is struggling with revenue, where they are using 60% of what they do internally in servicing loans alone. So we need to get to a time where we are able to be self-sufficient, where government internally generated funds, without even hitting the bond market, we should be able to do well by having more revenues or mobilization that is going to cater for the citizenry. So for now, where we are, we cannot put in place measures that will permanently solve our situation. Bank of Ghana just needs to announce how much they are going to pump into the system in a form of FX that is going to shore up the buffer that we have, to bring calmness to the system for our business people to be calm, and gradually we can see our cedi that will be appreciating against the major currencies.
All right, but before I let you go, my final question. Ghana's interest rate of 27.34% in the money market ranks it the highest amongst 12 Sub-Saharan African countries. Now, the currency is now ranked the worst performing in the world. How worse can it get?
If pragmatic measures are not taken, that is now the challenge we have, it's more of fiscal. How government will have to mop up a lot of revenue, how government will get some monies coming into the country. We are expecting about $750 million. Once the disbursement comes, we are told is going to help ease the burden on the cedi. For me, that will not be enough. We need to do more. And then it's high time we firmed up the negotiation that we are having with the IMF, so that we can get our bailouts and a chunk of money, FX, coming through to save our cedi. Else, it's going to get to a time where foreign direct investments might even not be coming through, because once investors invest in our economy and they get their returns and it has to be exchanged in USD for them, they'll be losing value. So at the end of the day, we might not get anybody coming in with any foreign direct investment.
Thank you so much for your thoughts. Christian Techijan is a financial analyst. Let's move on and do some other stories now. Ghana's poultry industry is on the verge of collapse due to the lack of regulation to check the dumping of chicken onto the Ghanaian market. This coming after over $600 million worth of chicken is imported into the country annually. There's more in this report.
Ghana International Trade Commission is seeking to find an amicable solution to unfair trade practices that have been a hindrance to many Ghanaian businesses, including the poultry industry. The investigation of dumping in the poultry industry follows widespread agitation from local players about loss of jobs and quality of products in the market. Executive Secretary of the Commission, Frank Ejekun, believes the hearing will help in curbing all forms of unfair trade practices in the poultry value chain and promote healthy competition among the players.
And so they bring us the chicken bags, the chicken legs, the chicken feet, the chicken necks and stuff like that, which are almost at zero rated. And they get them for napkins. So dumping them here costs nothing to them at all. And so they're able to sell at whatever price, and our locals are able to take them. But in doing that, this also goes against our local productivity. And that goes to make people laid off and stuff like that. So it all comes back to help the economy, in the sense that the poultry farmers are not producing enough, they are not making enough profits, they cannot pay the taxes that they need to pay, and they are not expanding, people are being laid off, and we get back to the poverty cycle.
Chairman of Ghana National Association of Poultry Farmers, Victor Opon Ejei, told the Commission that the situation is hurting the economy and part of the reason for the undue pressure on the local currency. He disclosed that about $600 million was used to import chicken last year.
About 600,000 metric tons, and in terms of birds, 569 million birds, and in terms its value over $600 million. We are saying that the imports are collapsing the poultry industry, as well as putting more pressure on the exchange rate, because it means every year we have to find over $600 million to import frozen chicken, whilst we can make the necessary arrangement to produce here to reduce that pressure that is coming onto our exchange rate.
Chairman of the Commission, Dr. Edu Jemfi, is hopeful that effective collaboration among stakeholders will help in dealing with the menace.
On that note, we end Business Live here on the Joy News channel. For more business stories, do log on to myjoyonline.com/business. My name is Beverly Broohm. We leave you with news making headlines on the international front. Enjoy the rest of our programs.